As you know, I like to look at the positives and negatives in the market and do my best to present them to you with an objective and open mind. How I use that information is to adjust my investment levels accordingly. And right now, the biggest positive in the market is there's very little distribution. Why that's important is because the big institutions control the market, and it's important to track what they're doing on a day-by-day basis. For those who have watched the Market Tops video in the educational portion of the website, you know that to get a top in the market, you'll see a cluster of 4 to 6 distribution days in a short period of time, roughly 3 to 4 weeks. That's why I'm keeping track of this on a day-by-day basis. Now, just to review, last weekend's video, I mentioned a little bit of a mixed picture. What I mean specifically is that there was very little distribution on the S&P 500, but 3 days were accumulating on the NASDAQ Composite, which is the chart we're looking at right now. So I'll point those out to you. There was a distribution day here on July 13th and one on July 21st and a third one here on July 23rd. Again, just to review, a distribution day is a down day in the market on heavier volume than the previous day. So obviously, for us to see a cluster of 4 to 6 distribution days, it has to start with 2 or 3. That's why I mentioned in last weekend's video, when there are even minor warning signs, I'm not only going to present them to you, but I'm also going to lean towards being a little bit cautious or defensive until we get a clearer picture, just in case it turns into, 3 distribution days turns into 4 or 5 or 6. A huge positive this week when I reset the lines is that we didn't see any more distribution. Just to review what happened, we gapped up on Monday, as you can see here. It was not an accumulation day, however, because it was slightly lower volume than the previous day, but still, nevertheless, a step in the right direction. Even though we were down on Tuesday, 2 things. We were down on Tuesday. Number 1, it was on lighter volume than the previous day. And 2, we held this 21, the green line here up top, the 21 EMA, which is the first level of institutional support. Again, a down day, but not horrible. What's even more impressive is Wednesday, Thursday, Friday on the NASDAQ Composite. When I reset the lines here, you can see they were all accumulation days. So you can see the volume accelerated Wednesday, Thursday, Friday, as we not only held the 21 EMA, but bounced higher, showing, believe it or not, institutions are still putting money to work into the markets. Now, when I look at the S&P 500, that's the one where I mentioned very little distribution. Same thing. There were no distribution days on the S&P. And in fact, we did see 3 accumulation days here on Monday, on Wednesday as well, and on Friday. Friday was nice because it was above average volume. So holding its 21 day, again, just to sum up, very little distribution. It's important because it's showing that the institutions are not consistently selling any stock, and it's holding up well. Another positive is we're above the key moving averages. As I mentioned, not only is the 21 day the first level of institutional support, or let me rephrase, in strong markets, the strong uptrends, strong markets and strong stocks tend to hold their 21 EMA, but the more important level to watch is on the weekly chart, which is the 10-week moving average. And why is that important? Because that's the main level of institutional support. It's the red line on this chart on the S&P 500. You can see we're above that line. When I pull up the others really quick on the NASDAQ, on the weekly chart here of the NASDAQ, we're still above this line, and we've really been above this line since for a while. That's why we've had such a strong trend, is because the institutions continue to support this market. A couple others really quick. S&P 400 mid-cap has held that level. The Dow bounced off of it. I don't look at the Dow too much, but might as well look at it. It bounced right off of that level. And also, when I look at the daily chart of the Russell 2000, not only is it above it on the weekly chart, but on the daily chart, just continues to hold up well. And and just continues to consolidate. Keep in mind the Russell just went from under 1,000 to over 1,500, over a 50% move to consolidate in this range. I think is perfectly healthy while we continue to hold key support levels. So just again, really quick to review. Positives, very little distribution. The three that showed up on the NASDAQ, they're not negated. It's just a step in the right direction that we didn't see anymore. We're above the key moving averages, the 10-week on all the major averages. The price action of stocks firmed up. And what I mean by that is, I'll pick up an example just to show you. There were a lot of one of the negatives I mentioned in last weekend's videos. There were a lot of stocks that were right around key levels, 21-day or the 50-day, and I just wanted to be patient until we get a clearer picture because there weren't a lot of safe entries or setups. And the biggest positive, I shouldn't say the biggest, another positive this past week is a lot of them bounced. Datadog, for example, was right on the red line here on the daily chart, that 50-day, which is close to the 10-week, right, pretty much very close. Nice to see that firm up and bounce. For example, something like DocuSign. Nice to see this sitting on its 21, the green day, the green line. Instead of heading down towards the 50-day here, it bounced and made new highs with accumulation. That's why I mean by they were right around that level. There were some that broke down, and I'll get into it when I get into the stocks. There were some that did go lower, but for the most part, the majority of leaders held those key levels, firmed up, and continued higher, so that's a huge positive. The Fed's a huge positive. They had a meeting this week, lost in all the earnings and so forth, where they just basically said they're not doing anything with interest rates, and they're going to continue to provide liquidity and when needed, so that's a huge backdrop for a equity-friendly environment. So those are positives. Now, again, I try to be open-minded, present some negatives. Seasonality, when I go back to the daily chart of the NASDAQ, traditionally, historically, August and September are two difficult months for the market, as a lot of people go on vacation between now and Labor Day. So that's something or into Labor Day, whatever, you know what I mean. These 2 months traditionally, something to keep in mind in the back of our mind. Number two is sentiment is mixed. Some sentiment surveys and measures are showing a lot of bullishness. Others are showing bearishness. When they conflict, number one, I always default to the price action of the leaders. And number two, keep in mind, sentiment is a secondary measure to the price action. So when they're mixed, I'm always going to default to stocks. One other potential negative is just the whole common phrase, this has gone on too long, this has gone on too far without a meaningful correction. The disconnect between the economy with some ugly numbers that tend to be lagging and the stock market, which tends to be leading, and the disconnect between that. It's a legitimate concern, but the best thing I can say is don't worry about it until the warning signs show up. I'm not saying to be complacent. I'm just telling you, I'm not going to sit here and stress about something that hasn't happened yet. When the institutions show some consistent selling, we break down below key averages, the leaders start to break down, I will do my best, as I did last weekend. Even any minor warning signs, I will do my best to pass that along. If you are concerned, my best advice is take a lighter position. Instead of being scared, nothing wrong. It doesn't have to be all or nothing. Take a lighter position. What that does is, if you are right, it builds your confidence, and then you'll start to maybe take larger positions. If you're wrong, at least you can stop yourself out quickly and avoid any sort of major damage. But again, I'm not going to stress about something that hasn't happened yet. So let's go back to the